Hello, fellow investor. I want to welcome you to this channel. In this video, we look at the earnings expectations for Citi. Citi is scheduled to report second quarter earnings on Tuesday, July 15th before the market open. We'll cover several topics to see how Citi is trading going into earnings and help set expectations moving forward. We will review the current price chart and trend charts, along with some key valuation metrics. I'll also share my Citi portfolio holdings and performance. Let's get started. In the previous quarter, Citigroup reported revenue of $21.6 billion, beating revenue estimates by $308.89 million. Citigroup reported earnings of $1.99 per share, beating estimates by 13 cents. For this quarter, the revenue estimate is $20.85 billion, with earnings per share of $1.61 per share. Over the last 90 days, one analyst raised estimates and 14 analysts lowered estimates. Citigroup meets or beats analysts' one-year forward estimates 55% of the time. Citigroup is showing positive relative strength going into the earnings. The options market is pricing an implied move of 4.8%. Citi is a new position in my equity portfolio and one that I am building. We'll look at the price chart and valuation metrics, which seem to indicate that we might have some better pricing available shortly. Citi has had a very nice run from the tariff announcement lows of about 55, and it ran up on Friday to an all-time high. Over the last 4 days, it's had a little bit of a turnover and is decreasing in price. The relative strength is still very positive. We're currently sitting at 69, with a threshold of 70 being overbought. So it wasn't an overbought condition, moved down slightly out of an overbought and just right on the verge of entering an overbought condition again. I'm also starting to see the momentum roll over a little bit. It hasn't crossed down through the signal line, which is the red. So the momentum is still above that signal line. But I entered only a very small position here just to keep it on my radar. And what I'm hoping for is a little better pricing over the next several days where I can add a little larger position to this particular holding. When we look at the relative strength compared to the SPX, we can see that it is outperforming the SPX on relative strength and on momentum at the moment. We do have positive accumulation. Over the last couple of weeks, we are starting to see a little bit of a decrease here, leading me to believe that we might get some lower pricing here in the next few days. The money flow is still very bullish, sitting above 0.05. So we're currently sitting at 235. So that's somewhat bullish for Citi. Citi is outperforming the SPY over the last year by 20 or a little over 20%. It's outperforming its sector, the XLF, by almost 5%. It's outperforming its industry group, diversified banks, by 3.39%. And diversified banks are outperforming the SPX overall by 16.08%. So we've got a strong component and a strong industry both outperforming the SPY. This leads me to believe that we have some potential with Citi, but we'll continue to watch that over the next couple of days. Citi, along with several of the other major large banks, will be announcing next week. So these will become critical to see what these banks are going to do moving forward. If we switch to the 5-year weekly trend chart, we can see that Citi is outperforming its longer term averages, and that's actually increasing. We see the same for the midterm averages, and also increasing. A little bit of a decrease this week, and also it is outperforming its short-term averages with a little bit of decrease over the last couple of days. When we look at the valuation, growth, and profitability key metrics from Seeking Alpha, we can see that Citi has an 11.76 times forward PE compared to its sector of 11.29, so pretty much trading in line with its sector. But the forward price to book is actually pretty alluring at the moment. Citi has a 0.79 forward price to book, while the sector is a little bit overpriced for that metric at 1.29. Citi has an expected EPS growth rate of 32.42% compared to the sector at 9.18%. So that's a plus for Citi. The expected revenue growth is less than the sector, with Citi at 3.38% compared to the sector at 6.59%. And then when we look at the net income margin, which is a measure of profitability, we see C at 18.62% compared to the sector at 22.56%. Finally, we'll take a look at fast graphs, and we can see that Citigroup trades at a blended PE of 12.97 times. They have an EPS yield of 7.71%, indicating fairly good value. They do pay a dividend with a yield of 2.61%. Over the time frame shown, Citi has had an adjusted operating earnings growth rate of 13.61%. FastGraphs calculates their fair value ratio at 15 times, and their normal PE is 10.85 times. That's the market valuation multiple. So what could our expectations be over the next year? From this point to the end of 2026, if it continues to trade at its normal PE, we could expect a total rate of return of 23.15% or 15.12 times. If we look at the fair value, which it has rarely traded to, maybe in 2017 it traded that high, but if it did, then we could expect a total rate of return of 68.16% or 42.38% annualized. I hope you found this earnings preview helpful. If so, please subscribe to the channel for future videos and consider giving a like to help support the channel. Thank you for stopping by. I wish you the best in your investment journey, and remember to trade well.